Hello everyone, welcome everyone for joining us today. I think we are going to start in 5 minutes. We are going to wait for more people to join us first before we start. And before we start, if you guys have any questions regarding on trading things, feel free to type on the chat. I will try my best to reply all of you if I can. So once again, welcome everyone for joining us. Thank you so much for your support tonight. So once again, thank you so much for your support today. And you guys have any questions, really feel free to type on the chat box. So for today's topic, we are going to discuss about the candlestick patterns. It's mostly analysis technical for everyone to learn it. So as usual, before we start, if you guys have any trading inquiries, feel free to type in the chat box. I will try my best to answer all of your questions. For example, if you guys want to understand more about the trends for the gold, dollar, crude oil, and then you're not sure what's going on now, and you can ask in the chat box. And then we actually found the first questions. What do you think about Nasdaq 100 and this continue bearish? So if we first, we can look at the Nasdaq charts first. And then you can notice, right, overall trends for the Nasdaq as for now might be still remain quite positive. So to explain why Nasdaq trends are very bullish as for now, it's mostly due to a few things. The first thing is regarding the Federal Reserve might consider to stop their rate hike decisions. So to put in a very simple way is, if the central bank as well as the Federal Reserve decide to not increase interest rates, this is normally one thing that can cause the US equity market to go up further. So if you are very interested to trade with the US stock like Nasdaq, Dow Jones, and then you are quite lazy to go through all the 100 companies financial reports, you can just use big fundamental regarding the Federal Reserve rate hike decisions. So they want to increase the interest rates. This will normally cause the US equity drop. And if the Federal Reserve decide to maintain a low interest rate or do not increase the rate anymore, this should be one thing that can benefit the US equity market. Because if the central bank decides to lower down the interest rates, it will be likely to reduce the borrowing cost for those companies, especially high technology company. So when they have a lower borrowing cost due to low interest rates, their business expansion should become better. They can borrow more money from banks. They can expand their business better. So outlook for the equity market should become better also. So I hope I answer your questions for Ahmad. And then Nasdaq also successfully break above the crucial resistance level around 15860. So as for now, it might be still considered a little bit positive. Next resistance level that we can focus on it should be around 1.6627. And then Ron actually asked, what do you think about the GBP market? Okay, I will explain it the market later. And then I think we still have 1 minute, then we are going to start it right away. And then Lalu Ahmad actually asked, can candlestick patterns apply to all types of market, including the crypto market? Actually, yes. So later I will explain trends one by one to let you guys understand it and how can we fully utilize the candlestick patterns for everyone. I hope you guys learned some things today, and I also hope I can learn something from you guys today. Once again, thank you so much for supporting us for the webinar tonight. So we are going to start in 5 seconds. Hello, Barry. So yeah, without wasting any time, we are going to start our webinar right now. And then before we start, here is some small risk disclaimer for everyone. So today's webinar is intended for educational and informational purpose only, and participants shall not take it as financial or investment advice nor a trading signal. The accuracy and reliability of the information provided cannot be guaranteed. Pew Prime and I hosting the sessions are not liable for any losses or damage resulting from the use of the information presented. Participants are responsible for independently verifying information and considering their own financial goal as well as the risk tolerance. So here is just a very small disclaimer for you guys, and then without wasting time, here's our webinar. So our webinar topics today is right, we are going to discuss about the candlestick pattern, and then after today's webinar, you guys able to learn what is the technical analysis, how can we draw the support and resistance line, and then how can we match everything with the candlestick pattern. Because if you just focus on the candlestick pattern, it should be insufficient for you to identify a very good trends. Sometimes it's better for you to combine with the candlestick patterns along with the support and resistance level. Later I will teach you one by one on how can we draw it, and then why is the technical analysis quite important for everyone. So here is some assumptions for technical analysis. So in technical analysis, we can try to understand what is the global investor think about it, because sometimes historical tends to repeat itself. For example, sometimes, right, the price hitting, for example, let me show you. Sometimes if the price hitting certain lowest level, it will keep repeating, hitting the level also. So this is the things that we mentioned. Historical trends might be happens in future. So previously you notice gold keep dropping, then in future there might be still a chance for the gold to dropping if it break below the support level. So this is a key things that we can focus on it, technical analysis. On assumption on the technical analysis, we are trying to use the historical charts to predict the future charts. And sometimes historical events tends to be happens and repeats. And then price move in trends by using the analysis, you're able to better determine what is the short-term trends, mid-term trend, and long-term trends. From there, you're able to set your stop loss level and TP level accurately. Because for example, right, if you are going to look at the overall charts, you are technical analysis is not just a chart for everyone to look at it. Sometimes technical analysis is the usage for everyone to understand what is the global investor, what is the global market participants are thinking on it. Because for example, if you are going to look at the gold itself, it might not have any value. So we need to tend to understand what is the historical people tend to value the gold at by using the technical charts. So to put in a very simple way to you guys, technical analysis is not just line charts, something like that. It's just one, it is the one thing that let you understand what is the global investor thinking on it. For example, now the gold price reached around 2039. It means that global investors are thinking this is a very solid price. That's why they keep the price on it. So by looking at the technical resistance level and support level, we tend to understand what is the key resistance level that investor might consider to sell, and then what is the support level that will cause the investor consider to long order. So by looking at the technical analysis, you're able to understand what's the world trader thinking. It's not just as simple as just a chart. It's the understanding for you with others, and this is what we call the connections. Okay. And then now, first thing, I'm going to teach you how to draw the support and resistance level, which is one of the major things that every traders need to learn about it, especially for new trader. So if you are going to remove for everything, support and resistance are very simple for you to draw, because if, for example, if one product, the price keep testing one region, you can notice on the gold, it means that this should be forming a very good resistance level. If you draw a line, you can notice there is a good line here. And then after the gold price break above the resistance level, it go up. So here is some suggestion on it. Then you can just use the MT4, click this one, the straight line, then you just draw on it. You can notice once you draw it right, it's very clear that a lot of people trying to sell when it reach around 2002. So it's testing, drop, and then retest. So resistance line is actually one line that keep touching one, the higher price that previously keep touching. So after it's break above the resistance level, it continue to go up. Then we need to draw another resistance level. We need to scroll back on the previous charts and see what is another high for the gold that keep testing and then retrace back, keep testing and then retrace back. So this is one of the example for gold. So as for now, if you are going to look at the charts, you can see H4, we are quite difficult to identify another resistance level, right? It's very complicated. So how can we draw it? how can we estimate the next resistance line? So you can actually try to scroll back previously. So all right, so assume you cannot find any historical high according to the chart already. What you need to do is it's better for you to scroll back. So when you scroll back, right, everything should become clearer again. So you look at the previous charts, you can notice, oh, previously gold testing this level, they start to rebound, retrace back. Here is a retracement back. And then after it spread above this level, it continue to go up. Okay, so you can look back on the historical charts and then you can actually draw a line from there. So let me show you how to draw the line. So you can just click here and then you can just draw it around this region. So it's very clear that every time gold touching this area, it will continue to drop further. And then next resistance level that we can focus on, it should be around here. You can notice every time gold touching 2045 or 46, I start to have some small retracement. This is why we mentioned as a very strong resistance level. This is very important because if you're trying to combine, it's better for you to combine the resistance level as well as the support level with the candlestick pattern. It's better for you to identify the trend reversal by using both trading strategy. And resistance, support and resistance level, and then candlestick pattern. So I hope you understand it. So how can we, to put in a very simple term, is how can we draw the support and resistance is you just need to identify the products that keep touching the prices one. So for example, 2000 is the prices that gold keep touching, then this should be a very solid resistance level. Touched a lot of times already. Okay. And vice versa, if you're going to look at the support level, how can we draw it? Then we just look at the downwards. Look at the lower price. So if you can notice on the gold price, after it's hitting this level, it starts to have some rebound, indicating that there are still some buyers supporting the gold price when it's reaching around here. Okay, so this is a line that we can focus on it. Then we can draw on the support line. You can see that. So this is already proof that once gold hit 1930, global investor might think this should be a very cheap price. That's why they decide to long it. So to put in the simple terms, resistance and support level is just not the line. This is a market expectations. You are using this kind of line to identify what prices that the global investor think they are very cheap, and then support level is one thing that you can use it to identify what is the cheapest price that the global investors are thinking according to the current market condition. So here is the proof, very cheap, then a lot of people buy it. Okay, and then to make it clearer, maybe we can use the crude oil as an example previously. It's very good for you to understand. It's better for you to look at the charts on it. You can notice that crude oil price previously keep hitting 67.25. It start to rebound back. So next time, right, it hit again. Everyone is thinking, oh, of course, since previously after it's hit, it start to rebound aggressively, then this time should be similar. Then it start to rebound back again. Then this is the third time. Testing again. Then they think that 67 is 225 is very cheap, then they continue to long it. So after keep testing the support level, it slowly provides some indications for the global investor that every time crude oil price hitting 67.25 is going to rebound. So when have this kind of expectations on it, right, it will be successfully forming a very, very solid support level. So every time the prices hitting a lower level, it will rebound. So when you want to identify your entry price, then maybe 67.25 is a good price that you can focus on it. So after that, after you draw a nice support level around here, then you make your entry point, and you can notice that this sometimes it really will experience certain rebound on it. So this is a very good example that can show you guys on the support level. Sometimes are very important because for crude oil prices, right, it's quite different with the company value. A company, you still can try to understand how much the company is going to earn, what is the company intrinsic value as the Warren Buffett's estimates, what is the intrinsic value, things like that. But if things turns to crude oil or even cryptocurrency, gold, how can you identify the value? How do you know how much should be the crude oil be? You cannot value the crude oil one. It's the market value the crude oil. It's different with the company. Companies earning value the intrinsic value of the company. But crude oil, it just markets. What's marketing about it, then it will be the prices. So we can try to understand by looking at the support level, resistance level, by understanding what is the global investor thinking on it. So this is the power of the support level as well as the resistance level. I hope I'm not getting too fast. And if you guys have any question, you can also let me know. And if I'm going too fast, you can also let me know. I will try to slow down. So you guys already have a brief understanding about what is the support level and resistance level already. It's just a line. And then the line that, how can we draw the line is when we look at the chart and then the price keep touching one, then this should be a very solid support level. Same with the resistance level. So the next support level, the next level should be where? Let me show you the example. So the next support level should be around here. You can notice on the price that after you keep testing, we start to drop back. Sorry, the next resistance level, which is also the previous support level. So if you notice this level, the prices keep touching, like keep hitting low and then keep touching it. This should be one solid resistance level on it that you can draw on it. So let me show you how to draw it. Same thing, just click the line. And then just draw it. So if you draw like that, right, by using the historical trends, right, you can identify now 73.10 is a very, very solid support level. And then this is already the proof that after it's hitting 73.10, the support level around here, crude oil recent trends suddenly rebound aggressively. So you can notice it's quite obvious. A lot of investors are using the support line to understand it. They are using the support line to understand what is the historical fund manager are thinking about, what is the cheapest price that investors are thinking about it. So this is a very good entry point because previously on 2022 December, crude oil price hitting 73.10, it will rebound back. So now they retest back on the support level. A lot of traders expect this should be the time for it to rebound because according to charts, it's very cheap and it starts to rebound. So this is a live proof of the support level. And then what can we expect now? Will the oil price go further? Then you can draw back on the resistance level. So what is the resistance level? You can notice this should be the one of the level that keep touching one here. So this should be one of the solid resistance level for everyone to focus on it. So same thing. Once you identify a good prices that the prices keep touching one, then you can draw a resistance line. So you can look at it. Okay, so you can notice oil prices are currently testing a very strong resistance level 78.85. Then maybe this should be the time for it to retrace or not. This is a consideration. So this is how we draw the support and resistance level, and then this is how we do the technical analysis. So I hope you guys have a brief understanding about what is the support and resistance level already. Don't worry, I will still continue to talk about the support and resistance level, but with some combinations, of candlestick pattern that our topics that we are going to discuss today. So you already understand what is the support and resistance level. Then the next questions is what is the good time frames that we can focus to draw the support resistance level? Because if you are going to look at the MT4 or any platform like TradingView, it's going to show you like M1, M5, M15, M30, 1 hour charts, 4 hour charts. Then this might be confuse you. What should be a very good time frame that I should set in order for me to set my support and resistance level? My suggestion is H4 and day one should be one of the good consideration for you guys to focus on it. If you want to focus on short-term trades, can, like 30-minute trade, M5 trade can, but you might be encounter certain risks because if you look at only M5, like 5-minute charts, like 5-minute pattern, you are going to experience a lot of noises in the market. So it's better for you to longer the time frame because sometimes the longer the time frames, once it is break above the resistance level or the support level, everything will become quite solid, and then it will be continue your trend. For example, this is the oil market, and then we are using the day one time frame. So after it's break above the resistance level around here, it start to increase aggressively. But if we are going to look at the M5, everything will be very, very complicated because M5, you might be encounter a lot of uncertainty on M5 market. Because for example, so suddenly one big fund going to buy the oil market, then you are going to hit your stop loss already. So it's better for you to open a smaller positions, but using a longer time frame for you to trade because it can reduce the market noises. So this will enhance your trading strategy. So M4 and H4 is, day one and H4 is one of the consideration that we can focus on it, and it needs some patience on it. And then gold is also another proof. Previously, this is a H4. So once it's break above the resistance level around 2000, it go up aggressively. Okay, and then if you are going to look at the H1, one moment. If you are going to look at the H1, right, everything might be a little bit confusing because you can look at the charts. H1 candlestick pattern like keep frustrating. It's very unclear. But if you just click on the H4, everything will be much clearer already. The trend should become clearer and clearer. So this is a thing. But I'm not saying that the H1 or M30, M5 mini charts are not good. It's good, but if you are a short-term trader, you want to do like 5 mini trades, 15 mini trades, then okay. But if you don't want to keep affected by the market movement, then it's better for you to longer your time frame. H4 and day one is great. Open a smaller position, special margin are quite enough from it. Okay, so avoid like you look at the 5 minute charts, any 5 minute movement, you getting nervous, then you can't do other stuff already. So this is the thing. Compared to H4, you just need like after 4 hours, you only look back on the charts. After 1 day close, you only look at the charts, and then the accuracy should be higher. This should be benefit for everyone, from my opinion. But of course, some trader will still go to short-term trades. It still can. It depends on your own trading style. So H4 daily is quite good for us to focus on it, and then we can use it to draw the support and resistance level. So some people might saying that, oh, support and resistance level are very, very difficult for us to draw. We are unable to draw it. So here's a solution for you, which is what we call the Fibonacci retracement. Seems like a very, very professional word, but the implication on it are very simple. Later, I will guide you one by one on how can we draw on the Fibonacci retracement chart. Okay, so Fibonacci retracement is one calculation method calculates by the Fibonacci, which is this guy. If you're trying to calculate the historical price movement and then use in the max to identify what is the potential support and resistance level. It seems like very complicated, but after I draw it, you guys will have a brief understanding on it. So now I'm going to teach you how can we draw the Fibonacci line by live. Let me see any Fibonacci example that we can show you. Okay, Euro is one of the good considerations for us to draw a Fibo. So how can we draw a Fibo is we need to use the MP4, and then you can see there is an F over here. If you don't see it, then you can just click insert Fibonacci here, retracement. So you can just click it. So after you draw it, right, you can see there is a line over here. How can we draw the line? How can we draw it nicely? Is you can draw it from the highest level, draw until the lowest level. So after you draw everything, right, you can notice all the support level and resistance level are nicely formed. Let me see whether there are another better example. So I think Euro as well are quite good example for you. So after you draw it, right, you can notice there is a support level and resistance level around here. This should be one thing that could solid. If you guys lazy to draw what is the support and resistance level, Fibonacci might help you because once you draw it, everything will come out by itself. And then another example is exactly USD. If I remove all the support and resistance level, just draw from it. So this is a brief understanding on the Fibo. You can see that after you draw it, this should be a solid resistance level as well as a support level. Then after you draw it, it will automatically show you guys one. Okay, so I will guide you how can we draw the Fibo. Now you guys have a brief understanding what is Fibo already, so it will show you support and resistance. And then more detail on how to draw it is very simple one. So here's the theory behind it. So if the trend is upward trend, right, how can we draw a Fibo? Is we by pulling the lower trends, pull to the highest trend. Then there must be a criteria that we do need a small retracement on it. If overall is a bullish trend, if overall keep going up, it's not advisable for you to draw Fibo. How can you draw a Fibo and how when a Fibo should be effective is overall trend is upward trends and then it experiences certain small retracement, right? Then you can draw a Fibo, drag from the lowest level, drag until the highest level before its retracement. Okay, so here is an example on it. And then let me show you a chart. So you can notice that overall trends is upward trend, right? But if we ignore here, if we don't have here, it's not good for you to draw a Fibo. But if you notice there is around 20 to 30% of the retracement area, then this is a very good people drawing. You just pull from the lowest level, pull to the highest level. You can notice all the support resistance level will automatically come out, and then it's very solid one. So for those who don't know how to draw people, don't know how to draw support resistance level, people should be helping you. So this is another example. Overall upward trends, but there are some small retracement on it. So after you draw it, support resistance will all nicely form. You can notice on it, very, very nice support resistance level. It cannot 100% accuracy lah, but maybe 70 to 80% accuracy is good enough for the trader around the world already. So this is an example of how we draw the people. Make sure you need to identify a big trend, upward trend, and then you need to make sure the product are experiencing 20 to 30% of the retracement on it. This is the example of our trend. And then downward trend, simple also. You just draw from the highest level, draw to the lowest, and then make sure lowest level experience certain rebound, 20 to 30% rebound. And then here is an example on it. Overall downward trend, then experience small rebound on it. Then this is how can you draw the Fibonacci line. You just pull from the highest level, pull towards the lowest level, and all the support resistance level is going to form on it. Okay, so I hope you guys understand more on the Fibonacci retracement already. If you guys have any inquiries on it, you can also ask more in the chats box. And then remember, this is an important note. Fibonacci retracement can only be used during reversal and not for instruments that has achieved new high or new low. So for those new high or new low, it's better for you to use the Fibonacci expansions that we are going to discuss this topic in future. So Fibonacci expansion is like, for example, this is a Fibonacci retracement. Overall, it's our trend, but no retracement. It's not good for you to draw the Fibonacci already. So next strategy is better for you to draw like that. Fibonacci expansion. How can we look at it is we click here, insert, Fibonacci, click here, expansion. So you can notice after you draw it, everything will come out. So this is how the Fibonacci expansions happens. I give you one example. I think I can show you live example on the gold. So imagine gold no more historical price. This is the all-time high for the gold. How can we draw the Fibonacci expansion? It's like that. Click here, Fibonacci expansion, click here, then you draw on it. You draw, right? You double click, right? You can see there are 3 dots. Let me show you. Okay. There are 3 different dots. First dot, second dot, third dot. So you need to adjust the dots. How can we adjust the dot? Is by looking at the charts. The first dot is the lowest level on it. The second dot is the highest level, but the highest level experience certain retracement. This area is the third dot. So it's just like a triangle for you guys to understand on it. So one example that, let me show you how. So your first dot should be clicking here, second dot here, third dot over here. It's like a triangle. Lowest level that showing some rebound trends here is the lowest level, and then keep going up, going up, going up, and then here should be the recent high already. If you draw here, we don't have the retracement, so cannot. You need to have like after it's hitting the recent high, then it experience certain retracement. That's how you can draw the third dots on it. So yeah. So according to the Fibonacci expansion, it's drawn like that lah. So lowest level, highest level before it highest level. Then after it makes some retracement, then you can put your third dots around here. So you can notice after you draw it, right, you don't even need to look back on the charts, previous charts to identify what is a solid support level and resistance level. It will automatically come out. You can see that here is a very nice resistance level already. And then the next resistance level should be around 2100 according to Fibonacci expansions. So this is how we identify on it. If overall is our trend, and then we cannot focus, we can't find any high level already. So Fibonacci expansion is going to help you. Okay, and then now you guys have a brief understanding about what is the support level, what is the resistance level already, and then you guys also have some understanding about indicator, Fibonacci retracement indicator, Fibonacci expansion indicator. So now we are going to focus on the candlestick pattern. So this is a long way journey, but candlestick pattern is very simple. You don't have to think something like very confused. You just need to understand and memorize the symbol on it. So today we are going to discuss on the can consider six major candlestick pattern that can able to assist you guide, which is what we call the hammer, hangman, bullish and engulfing candlestick, morning star, evening star. Very simple pattern. So let's move on towards the first pattern, which is what we call the hammer. Hammer is very simple. It looks like just a hammer. So that's why it called a hammer candlestick. Normally, hammer candlestick is like that one. So the body, candlestick body, and then we do have a very long shadow like a balloon. You don't have any shadow or you don't have any head one. It's only body as well as the shadow. So it's just like a balloon. This is what we call the hammer. So sometimes if you notice this kind of candlestick pattern, right, it might be indicating that there might be experience some trend reversal. So from downward trends move towards upward trend is what we call the hammer. But from the upward trends move towards downward trends is what we call the hanging man. So let me show you the real life example on it. So here is the charts. Overall is downward trend. But after that, it's forming the hammer. It starts to rebound aggressively. Okay, so if you guys have an understanding already, then move on. We are going to focus on MT4. If you guys can help me to find what is a hammer, good hammer example. So let me see here, any good example on it. I think remain the same. Crude oil should be one thing that we can focus on it that previously. A very, very nice hammer, especially is hitting the support level around here. You can notice, as we mentioned just now, right? Support level here is very important. And then you can notice here, especially the candlestick pattern around here, this candlestick pattern. One moment, let me make it clearer for you guys. You can see that here is a hammer, right? You can notice the candlestick is like that. The body is like that, but the shadow is very long. So after it's forming the hammer, it starts to increase aggressively. This is also another example. Very, very long shadow, body very, very short. Then start to experience certain significant rebound on it. So hammer, like it's not like when you look at the charts, you look, oh, there is a hammer, then you long, and it's no, yeah, you cannot like you cannot like that. It's better for you to combine, make some combinations between the support and the resistance level. So you can see here is a very solid solid support level already. Then you need to try to find certain trend reversal candlestick pattern on it. So you're trying to find the hammer. So once you find the hammer, then you wait for the third candlestick to open. If it still remains bullish, then it's a very good opportunity for you to focus on it already. Okay. So hammer oil is a very best example that you can prove it up. And then another thing should be others candlestick pattern. Let me see anything else. So as for now, hammer should just a few example, but I do notice there will be another very good candlestick pattern, which is the bullish engulfing and bearish engulfing that I noticed on the charts. It show more on it. So okay, so I found another hammer, but it's inverted hammer lah. So hammer but inverted. So after it's formed an inverted hammer, it starts to rebound back. So every time you notice this kind of candlestick pattern, right, it won't keep forming one. So it's better for you to wait until certain candlestick form, then you entry on it. Okay. So you guys have a brief understanding about what is hammer already. And then it's better for you to combine support and resistance level. This is very important. Engulfing. We are going to discuss bullish engulfing and bearish engulfing. So as for now, I do think the bullish engulfing and the bearish engulfing, right, is very, very good for us to look at the charts and identify the trend reversal. So it's better for you to combine support and resistance level. Let me show you a lot of good example on it. The first example is the Dow Jones. Previous chart lah. Now we can't notice any trend reversal already. So previous charts, this area should be a quite, I cannot say a very, very good support level, but it's a support level for everyone to focus on it. Sorry, before we go through the charts, I let you guys understand what is bearish engulfing and bullish engulfing first. So bullish engulfing is very simple. There are two candlesticks, but you need to notice the buy candlestick or the bull candlestick need to be bigger than the sell candlestick. So I repeat, the buying candlestick, the bullish candlestick should be bigger than the bearish candlestick or the selling candlestick. So when it forms, it's what we call the bullish engulfing. It might be experience certain trend reversal. You can combine with technical resistance level and the support level. But the bearish engulfing candlestick is another thing. Is the selling candlestick bigger than the bullish candlestick or buying candlestick? So when it's bigger, then it's the time for us to focus on the trend reversal on it. So here is the example. You can see, red color is selling candlestick or bearish candlestick. After it's formed, the red color be smaller than the green color, which is the bullish candlestick. Overall trends keep going up, trend reversal already. Okay. And then same along with bearish engulfing. So selling candlestick is the red color one, bigger, and then shadow. And then the buying candlestick or the bullish candlestick smaller. So it's continue to drop. This might be complicated, but when I show you the real example, it might be clearer. So here is the one proof on it. Let me show you any better. Okay, let me show you. If you look at this is a USD JPY daily charts. As you mentioned, daily should become clearer. Should provide a clearer picture. So now we draw the support level right here. How can we draw the line? Why I draw the line around here is because you can notice on the chart, these prices have been keep testing it before. So once you draw it, and then you can just focus on the candlestick pattern. So you can notice on the charts, previously, I think I zoomed the candlestick for you clearer. Okay, so previously it keep dropping one, right? Then after it's hit the support level, it starts to rebound and increase aggressively. But support level is just one thing that you can identify a good buying point. What is the major catalyst that cause the USD JPY to go up further is you can look at the candlestick pattern. You can look at the candlestick pattern. You can see the candlestick pattern around here, right? Are actually showing a bullish engulfing candlestick. The buying candlestick, which is the green color, is much bigger than the red color bearish candlestick. So once it forms, right, it going up aggressively. So this is a proof on it. And then another example should be Dow Jones. As you mentioned just now, you can draw a support level around here. So once it forms the bullish engulfing candlestick, it just keep going up. So you look at here, very clear and nice. Bullish candlestick bigger than the bearish candlestick. Green color bigger than the red color. It's a very good trend reversal. One example, but the best example should be around here. So you can notice. And then you can combine with some support level. So let's see if here is a very solid support level. So here. You can see that here is a very strong support level. Okay, you can see here is a very strong support level, right? Because they have been testing quite a lot of time before already. Then if you look at the charts, you combine it. Imagine you are here. The price are testing a very strong support level and then end up bullish and engulfing candlestick are formed. Then it rebound aggressively. So it's better for you to make some combinations for the support and resistance level on it, because this kind of candlestick pattern, right, is better for you to identify trend reversal. So if overall is bullish trend, right, if overall is go up, it's not going down, imagine not going down, overall is keep going up one. But there is some formation of the bullish or bearish engulfing candlestick. It might be not strong enough for you to identify the trend on it. So how the candlestick pattern like bearish engulfing, bullish engulfing are strong is when the price hitting the support level or the resistance level. So imagine if this overall is our trend, but suddenly it forms a very long shadow, a long bearish candlestick around here. It's still not solid because we don't have a very solid resistance level around here. So it's better for you to combine on it. So I hope I briefly explain about what is the bearish engulfing and bullish engulfing candlestick for you guys. So this is an example. Make sure hitting the resistance level or the support level, then you make sure the candlestick pattern have been formed. Bearish engulfing candlestick, bullish engulfing candlestick has been formed, then it's a very good trend reversal opportunity. Okay. Another thing is morning star. Morning star are very simple. It's just like a T, a small body, long shadow. So let's see we have any morning star example. So here is a very, very good example of the morning star. This is a GBP USD. So you can see that maybe it's up here. Let me zoom for you. Wait. Okay, you can see here is the star, morning star, the T, a small T. So after it's forming a small T, right, and especially it's hitting a crucial support level, right, it keeps going up. So let me show you why we think this is a very crucial support level. Let me zoom out, and then it will be clearer. So you can see here, the price around here, right? Every time you testing, it rebound, testing, rebound. So you want to make sure it will be rebound, you wait for the candlestick, trend reversal candlestick to be formed. So as for now, here is the morning star candlestick, or another term is doji candlestick. You can notice over here. A very, very small candlestick, a small body shadow, a small body long shadow candlestick. So once it's formed, right, it's rebound aggressively. So this is how the morning star form, and then you can also notice here we do have a bullish engulfing. So every time it's hitting the support level, right, it's better for you to not directly buy it. It's better for you to wait until certain trend reversal on it. So we do have two examples already. First, morning star. This is what we call the bullish engulfing. Bullish candlestick bigger than the shorting candlestick, and then here is another morning star. Morning star combined with the hammer, you can see that, especially when it's hitting the support level. Here is the hammer, remember? Body, long shadow. So once this kind of candlestick form, it's very good for us to identify a trend reversal. So when you need to stop loss, or when you think it's time for it to drop, is another trend reversal candlestick to be formed. Here's let me show you the resistance level first. So here is the resistance level, yeah. Okay, so you can see, bearish engulfing candlestick have been formed. Okay, so it's drop back and then retest back on the support level. Here is what we call the evening star candlestick. Small body, long shadow. After it's formed, it's drop back. Okay, so this is how we identify the trends on it. It's better for you to do some combinations. So this is a real example of morning star. So when it's formed a morning star, there will be a chances for trend reversal. Same goes with the evening star. So this is all the webinar topic that we are going to discuss today. I'm going to open for Q&A sessions. I noticed a lot of people are asking certain questions, and you guys can also ask me more questions if you want. I will try my best to answer you. So first questions, please can I have the setting for Fibonacci retracement? Yes, you can download from the MP4 to answer family questions. So you can download from MP4 from Q Prime. Then after you install everything, right, it will automatically inside your settings one. You just click insert, click Fibonacci retracement on it, or you just click here. There is a EFA here, then you just click here. Then once you click it, you can get a Fibonacci tools already to answer family questions. For those people that need the PowerPoint presentation, yes, I think we will send another email for you to share you the recording. Same goes with the PowerPoint presentations. Any more questions? Somebody actually asked. Yeah, I think I mostly answer already. I hope today's webinar can really guide you and make you guys have a more understanding on the candlestick pattern. I'm not going too fast. Okay, so somebody asked, Sean Solar, can you please recap on the difference in the use of the Fibonacci retracement and expansions? Can very simple one. Okay, so Fibonacci retracement, right? How can we use it is when there is a criteria for us to use the Fibonacci retracement. The criteria is right. Overall trend is I keep wrong click. Okay, you can notice overall trend is bullish. And then if you notice there is a small retracement, 20 to 30% on it, then this is a chance for you to draw the Fibonacci retracement. But compared to the Fibonacci expansions, you need to, okay, so imagine overall trend is go up, no retracement, just keep going up. So no retracement, no 20 to 30% drop back. You cannot use the Fibonacci retracement already. So it's better for you to use the Fibonacci expansions. So how can we use the Fibonacci expansions? As we mentioned also just now, you just click on the MT4, inserts, and then Fibonacci expansion. Then after you click, you do notice there will be a tree line. So just trying to make sure there is a triangle over there. So for example, here, let me see, it's good. So let me draw for you again for the gold people. So inserts, people, expansions. Then you need to make sure the triangle are working. So imagine, the first point you need to touch on it is the first rebound on the charts. Like after that, it keep dropping. Then after it's hitting certain point, it experiences certain rebound. So this is where you need to draw your first point. Your second point is you need to draw on the highest level. But you cannot draw here because if you draw here, you cannot put your third point already. No more third point. So you need to make sure you need to draw on the line where after it's hitting the recent high, you experience certain retracement. So here is the places that you draw on the third point. Okay, so let me clear the drawing. So you can look at it. First point, second point, which is the highest level recently. But you cannot draw here. Why you cannot draw here is because no retracement. You need to measure a certain retracement on it. So you can draw the third point. So after you draw it, Fibonacci expansion is going to form. Support resistance level will too newly form. You don't have to scroll back. This is how we draw the Fibo expansions. Okay. I hope I answer soon solar questions. Your last example of Morningstar had a doji in between. Does that count? Which one? Or you mean this one, is it? It's count actually, it depends. It's like after this kind of candlestick trend reversal have been formed, right? It doesn't mean 100% accuracy that you can gain from it. So you don't notice like, oh, you look at this charts, then very nice, bullish, bearish engulfing, very nice. Then you just put all your money and then just do one bet. No, it's only will increase your probability to success, but it's not 100% of the probabilities. So if you are very worried about your trades that you are being losses, then it's better for you to put your stop loss because it's worth. Let me show you. If you consider a long position around here, right, the stop loss level can just put below the support level. So the usage of the support and resistance level can be also helping you to set your TP as well as your stop loss level. So you just put your stop loss level when it reach below 137.50. So if you are wrong, then maybe you are going to losing 900 pips, sorry, 900 point or 100 points. But if you are correct, your gain are quite a lot. So it will help you to setting your stop loss, and you need to set your TP as well as your stop loss. It doesn't mean that if you notice one candlestick pattern, then you just all in on it. Okay. It will just enhance your trading strategy, but of course, no 100% things. It's better for you to combine everything, support, resistance, set on a good stop loss level, things like that. I hope I answer your questions also, Okochi Uzurumi. I just want to know if these are all the candlestick patterns. Actually, in my opinion, there are tons of candlestick patterns in the world. There are a lot of weird candlestick patterns also. But in my opinion, for new trader or the most useful candlestick, these 6 candlesticks should be good enough for everyone. You can just combine these 6 candlesticks with support and resistance level, should be enough already. Sometimes, right, there are tons of different professional trading strategy, but it's not quite useful also. So if you notice on it. So sometimes simple is good. Just combine support and resistance level, just reading on the market fundamental news, and just focus on certain trend reversal candlestick should be enough. You don't have to learn too much things one. Okay, to answer Yusuf questions. Any more questions you guys want to answer? Ahmad actually asked when it's better to use Fibo retracement instead of locating support and resistance area. Okay, so let me see how can I answer your question. It depends on what types of trader you are. So sometimes you lazy to draw all the support and resistance level, then you can just use the FIBO. FIBO is by using the calculator method, but of course, it's better for you to use your own support and resistance level to draw it. FIBO is just a tool, but sometimes if you think your support and resistance level is better, you can make a comparison one. For example, right, UJ, how we draw a FIBO is we draw from the highest level, draw to the lowest level. So all the support resistance level is going to fall already. So it depends on you. Do you think this is a very good support or support level, resistance level or not? It depends on you. If you don't think this is very good enough, you think your drawing should be better, then you just remove the FIBO, then you just draw by yourself. So I hope I answer your questions also. For Ahmad, is it better to use FIBO or support resistance? You can, yeah, you can draw first, then you see, oh, whether it's nice or not. If it's nice, then why not? You just use it. If not nice, then you just remove it and then you draw by your own. Okay. What about tweezer, sir? Tweezer is one thing like candlestick pattern. For the others, do you guys have any things want to ask me? Okay, so after we see Morningstar, after we see the Anthony is actually asking, after we see the Morningstar, how long after the ascent happened? Okay, so it depends. I cannot guarantee you after you see the Morningstar, then the next 30 minutes it will form, it will go out already. You cannot say like that because you need to understand that we need to make sure all the market participants are noticed on the Morningstar, then they enter on it. But to have a better confirmations, right? Any trend reversal to have a better confirmations, right? You can try to use the H4. So after you see the Morningstar, right? And then you need to make sure that another candlestick are still remain bullish. And even after it's closed, after 4 hours, the candlestick are still remain bullish, then this is a time that you can focus on another long positions. So if you are using the H4 time frame, then it's better for you to wait also. Sometimes even it's from the Morningstar, but the next candlestick dropping, there is another story also. So it's better for you to wait after the Morningstar form. What will be the next candlestick do going on? What's going on in the next candlestick? If the next candlestick close with bullish candlestick, then it's better for you to identify a bullish trends. Okay. To make certain more confirmations lah. I hope I also answer your questions for Anthony. Can you throw more light on the hammer and hangman? Can? Actually, hammer and hangman very simple also. So you just need to memorize the pattern, the drawing pattern. Like a hammer, balloon, or you can, if you think hammer is too difficult, then you just think it's like balloon, body, and then long shadow. So one is form, it's very good trend reversal pattern. So this is a real example. So I hope I answer your question also, Yusuf. Very simple one. All right. So I think we are going to open for another 2 minutes. If you guys have questions, I will try my best to answer. If not, we are going to end now. I really appreciate for your supports on Earth. It's very happy for me to see a lot of people are supporting Earth. And then I also hope the analysis is helping you guys also. Yeah, just a kind of reminder no matter how, sometimes if you notice on certain candlestick pattern, very nice, rebound on a certain support level, it's better for you to consider certain stop loss, or you cannot all in all your capital just because of one candlestick pattern. Because according to Forex, CFD products or the commodities product, is going to affected by the world fundamental thing, the world economy thing. So for example, the candlestick pattern is very good for you to long already, are very good. Then suddenly there are certain fundamental that cause the difference. So no matter how good is your technical analysis, right, you are going to lose your money. Right? So it's not 100% one. It's better for you to understand fundamentally and technical analysis, and then trying to combine everything. Please remember to consider stop loss for your trading style. No matter how good you look at the charts and you have the feeling on it, no matter how good is it, it's better for you to play safe also lah. Okay, I hope I helping you guys. So if no questions anymore, we are going to end now. Thank you everyone. for your supporting. All right, thank you so much, and have a nice day. Good night, sir.